Good evening. This is Ken Long at Tortoise Capital with the review of the daily live trading workshop in Kansas City, day 2 of our workshop. It's July 31st, 2018, day before Apple's earnings after market. The first thing to understand is the kind of day we had today. There was a small gap up. This is on 1-minute charts, and SPY is the symbol. Small gap up. Some chopping around, 3 or 4 small waves, and some of our hybrid frogs got chopped up in this. And then right around 10:30 Central, get a nice orderly low volatility pull to the upside, followed by a orderly roll to the downside, and then a sharp finish into the close. And so our experience was getting a little chopped up with hybrid frogs here, but we got locked into some really nice trending moves, got multiple positions on, and so we ended up with over a 10-hour day today for the second day in a row. So it's important to understand it was that kind of market and that kind of trade sequence. And so, as usual, here was our trade sequence. This was our trade sequence plot, so trade 1, trade 2, and so on based on the execution risk capture. So our execution risk is the risk that we take in the hypothesis of the trade. It's if the trade moves immediately against us, it's the price that we have to see in order to disprove the hypothesis. That's normally about 1/3 of our position sizing risk. So if the trade moves against us and invalidates the hypothesis immediately, it usually works out to a minus 0.3 R. To qualify the trade to the upside, we have to see 2 full R of reasonable potential, meaning it could be essentially seen as a 6-to-1 reward to risk ratio in that sense. That may actually vary based on the relationship between the execution risk and the position sizing risk. That's part of the technique that we teach at our workshop in order to manage stress and to bring the power of process control and statistics to work in our favor. So this is our trade sequence plot. You'll notice we have nothing less or nothing worse than a 1-hour loss in the execution risk, and some nice multiples of R. And the upward sloping regression line here is pointing out that as the day proceeded, we got better and better in tune with the market and picking the directions, and that improved our performance. We had some initial success, and then the hybrid frogs were getting chopped up a little bit, but we centered around 1.0 expectancy for the day. 29 trades. The best trade was 4.8. The worst was -1. We had 20 winners, 7 losers, 2 scratches. You can see the win rates and losing rates, and then the payoff roughly 2-to-1. Reasonable standard or system quality number and an NSQN normalized for 100. And this was our cumulative R capture. Again, this is for execution risk. And so that makes our position sizing risk about 1/3 of that, or somewhere around 10. All right, let's take a look at the trades. These were the symbols that we traded today. We'll start with Alcoa. Okay, so here we are with Alcoa, and here's the open here, and the hybrid frog box straddling the open. Let's see if we can get this to work now. Playing it forward. Departs the hybrid frog box to the north, so we're long, using one hybrid frog box as our stop. On the retracement through the dragon, you can see the dragon, our 10-period Bollinger Band, plus or minus a half SD. You see the RL10. You can see the Z3 lines, 3 standard deviations, the Bollinger Band mean, using our PSAR. So price retracement and a PSAR stop to get paid about a this is roughly one execution stop. Range compression. The next thing we're doing is taking a, you'll notice the winter of MACD histogram, the spring as it's approaching the zero line, or the summer. We front run that just slightly. We get our, on this breakout with our risk box, and we're hoping for a nice summer excursion, which we get. The PSAR tracking a nice trailing stop here also. Our experience has been, once this PSAR gets started, we get a nice, I like to wait about 10 bars before that picks up. And you see the summer rolls into fall as it comes out of that Bollinger Band on the MACD histogram, MACD line. We go ahead and take a money management stop here at nice payoff. Next time we see Alcoa, we are playing a summer. This is fall, winter, spring, summer, back to the zero line, and then resume. This creates a pocket entry, which we love. Let me shrink this so you can see the entry. So price, you have the RL10, a higher 10, higher low, and RLXD takes out the hump of the dragon, emerging dragon. So it's an emerging dragon in the summer, standard exit for initial risk. And now you can see we're closing on towards, this was the last gasp of the afternoon, and basically get timed out here at 245. That was good enough. You can see this nice recovery here. When it gets to the fall and then picks up again, that's reason to stick a little longer. So this last trade of the day was a nice way to finish with Alcoa. So we were pretty much in tune with the Alcoa moves today. Okay, next up is American Express. This was yesterday's close. Finance was weak, so we were prepared for more weakness today. We set up our hybrid frog box. The open was a slight gap up. Almost immediately get a hybrid frog entry to the downside with a stop right at the open. Get a 1, 2, 3 exit. I like getting paid. Plus we had a XLF was starting to work its way up, so we just take our quick cash in the morning to get well started. The Bollinger Band mean gets rejected, so this trade gets to the price gets across the Bollinger Band mean. The dragon hits the Bollinger Band mean and crosses back down, so this is a pocket entry to the short side. Finance as a sector is weak. This was not a very good exit. This should have been probably at the RLXD, a span of control issue. But we cashed that trade at the Bollinger Band mean, so we still make some. This is a stop and reverse, because now what we have is an extreme winter move crossing into spring, crosses its 5-period Bollinger, or 5-period moving average, and now is approaching in the spring, and now this is an owl pattern. Unambiguous move, a P1 outside the P1 formation, RLXD, dragon is rolling up, 30 is rolling up, and so that's a stop and reverse. Up we go. Failure, take 1R execution, execution loss. We'll try it long again. Scratch. And I think that's all we had for AXP today. A loss and a scratch, and we had better fish to fry. This could have been exploited. This rejection at the Bollinger, or at the MACD 0 line was a clear indication of downward. Just missed that. And then here's an owl pattern in here to the long side. But by this time of day, we had bigger fish to fry and span of control. And AXP closes without further ado. Can't get them all. Next up is Caterpillar. It had a long slide, so we thought it might be in play today. Significant gap up. Hybrid frog box on either side of the open. Entry. Cash a 1 execution R. And that was basically it for Caterpillar, although this is another one that offered more. Here's a Z3 pinch and a breakout either here or here with price above the 0 line and going, and that's one that a cat specialist should have had. Look how much we left on the table. Like I said, can't get them all. Next up is DIA, the Dow 30. Here's the open. We had been trading it yesterday, had some success. Closed weekly, gap up to here. Hybrid frog to the long side. And got stopped out for 1 execution R loss. Tried a second long. Grinding north. Second position DIA here as it hooks up after coming back to the 0 line, so our second position in. And an exit. Nice trade. I think that's all we had. Yep, missed the shenanigans in the afternoon. Next one up for us was Devon Energy, opened over here. The energy sector was pretty much flat all day, then had some downward pressure on this rejection at the 0 line. In MACD seasonality, we pick up the winter trade, breakout here, stop at the above the PSAR. Cash. We're coming up into the spring and approaching summer, so we stop and reverse. Now we're long. Gives us an orderly exit as the summer rolls into fall. So we're flat. Missed this long summer run. Lots of other things going on at the time. So we pick up this Z3 expansion. Now I'm sorry, that was the 30th. So you get a free look at the 30th. Sorry about that. So the 31st, hybrid frog entry to the downside. We were looking at a range stat expansion down here. This is actually even better. So Devon Energy. And we cash here on entering the spring. Sorry about that. And missed that move. Oish. Felt pretty stupid right there. And so missed the really nice move in Devon Energy. So the things to learn on this one: a low, a higher low in MACD. So that's the spring, the second spring. Crossing the 0 line, you pick up a long bias, and then every one of these where it comes back and tests the 5 and then takes off again, every one of those is good. Oh, It hurts my feelings, but what are you going to do? Next up is DuPont. Here was the opening. We did nothing with it until we got a Z3 pinch. By the Z3 pinch breakout coinciding with a summer move to the upside. We like it when they work in our favor immediately. Collapsing into a Z3 pinch, but still grinding north, still above the zero line. And then on the second leg down, coming back to the zero line, go ahead and take and cash that. And I think that's all we had. Yep. But really nice move in DuPont that made it easier to have missed Devon. That was a simultaneous trade, and we were working this one pretty hard. Hybrid frog entry on Mexico. We waited a couple minutes, took the breakout to the upside. It gets into the money pretty quickly. Cash a routine trade to get paid on a price breaking the dragon and then rolling into fall. Like to get paid early in the day. Missed a Z3 expansion to the downside. Missed the rejection at the zero line. Ugh. Missed the Z3 pinch expansion to the upside. Classic owl. I think we had more. There we go. So in the afternoon, we'd had a nice run with the major indices after lunch and going towards the last couple hours. Got chopped up here in Mexico. Tried the long move. Stopped for a 1 hour execution. Stop and reverse to go short. Stopped at half of the execution risk to go long. No excuse for not being out of this yet. And then we get stopped out, time stop over here. So not very well played in Mexico. And then missed this run. So normally a good trender, and the better trend obviously was right there. Missed all of it, and missed all of that on the upside. So it's no excuse for that. Mexico is one of the frog champions. Just poor attention to detail on that one. And also a span of control. There's only. All right, next up, Brazil. Here's the opening. Get the hybrid frog box to the south side. Covered. And now we're going to get long, I believe. Yeah. Second position long. Let's try to zoom in so we can see that a little easier. Yep, so this was the short, covered. And we were measuring the amount of capture here, and this really became a dead money. It failed to fail further. The rest of the market was healing. You can see that it had gotten into the summer on MACD. So we bought here with a short, a tight stop. Second position. And failed to follow through any further. Cash, stop and reverse, got short. Second position. Covered. Paused long. -1. This is one where I was just trying to make it work, but just it wasn't there. And then missed the short, and then missed the owl reversal. But it was getting late in the day at that point. Intel. Let's see here. Here's the hybrid frog entry to the short side, covered, stopped and reversed, stopped out. Got short, stopped, so that's 2 in a row. They got me. Pause that refreshes. So now we have a crossing of the zero line. This is a summer entry, RLXD, a low, a higher low into the summer through the fair value of the RL270. Second position, third position. Big win for that day. Staying with it. Don't have to get them all. And notice the rollover here on 3 positions, RLXD, PSAR flip. Enough is enough. And I think that may have been, we tried a little more in the afternoon. Nope, that was it. That was it for Brazil. Next up, small caps. We did a lot of that today. So we had our first hybrid frog. Actually, not a hybrid frog. This is a winter into spring PSAR flip. The market was going long at that time, but we scratched, reversed, reversed, went long. That one paid off. It failed to fail, so we re-entered long. That's one of those where it's still above the zero line and was looking favorable. So we're long, second long, and so covered or exited here on a coming back to the zero line. So could we have gotten on here? Yeah, sure, but the rest of the market was wanting to go up, so we were able to endure some winter and spring, but then when it rejected the zero line again, that felt like enough. So really good trade on that one. Missed the stop and reverse. Ugh. So we tried to get short, and then that one scratched, or I'm sorry, 1 hour loss. Tried to get long. That one had money in hand, but was trying to make it work. I think I stayed too long in there. Now we're into the chop, going towards the close, and we get timed out over in here. So for a fractional gain, 3M. This was a swing trade that has been working after a big sell-off, much like Intel was. And so this was very orderly close, gap up, hybrid frog long. It doesn't get any cleaner than that. Kind of dead money. You see the Z3 pinch happening. So we locked that one in. Then it gets a Z3 pinch, then a breakout using the PSAR, and now we're above the zero line. So now we're long. Should have had a second position. So just cash it on the Z3 pinch breakdown. Was digesting the gains, came back and made a higher low. So now this was the winter into the spring and recovery. So we buy that one. This was part of that 2 o'clock afternoon run, grinding up. Wanted to get paid as we're going past 3. Missed some follow-on, but that was a pretty good late afternoon trade. Merck. Missed all of this run. What we had was a hybrid frog entry on the long side and then cashed in the usual way as it entered the fall, but then missed all of this. Microsoft, the only trade we had during that day, there was some tech bouncing and gains, and at one point it was the strongest in the tech sector. The rest of the tech was tanking, so I tried Microsoft, but you can see it was a long and then a 1 hour loss, so short-lived. And so that's our luck. The winners that we had, where we got those multiple positions into them, really paid off. For the most part, was pretty good about respecting the stops. There are a couple times I stuck around too long, but I was pleased with performance on the big moves, that we were able to stay with them by using the MACD histogram and the seasons of the MACD. And again, even despite all that sloppiness, I feel, and missed opportunities, I'm willing to take those stats and work on getting better. So that's Ken at Tortoise Capital. This is day 2 of the live trading workshop here in Kansas City. We got a dozen traders working hard together and making gains. And we're excited about the market tomorrow. Apple had a pretty good earnings release. The market has pulled back, and so now there's room to run to the upside. Tech's been beaten down a little bit, so we're expecting some fireworks in the first hour. So we're having a nice meal, getting some exercise and fresh air, a good night's sleep, and tomorrow is a new day. We're going to continue to work on anticipating, integrating, and simplifying our trading plan, managing our losses, and working on basic battle drills. So take good care, and we will see you in the chat room.